Hi, this is Kerry Artek with Wicked Stocks bringing you the daily Apple report for Friday, January 20th, 2023. Before I jump into the Apple charts, well, first of all, of course, please click like if you would and subscribe if you haven't already. Please share the content if you would with friends and colleagues. Getting the word out really helps us out a great deal. So I'm going to show the last chart here is actually not Apple, it's Amazon. And the reason I'm bringing it up is because we put out a free Amazon stock pick last week. If you recall, if you haven't seen it already, it is there on our Wicked Stocks YouTube channel. We've tested this channel structure. This is a daily chart. We show a weekly chart in the video itself, but I just wanted to underscore the fact that we've tested this channel resistance. We put out a key reversal high on Wednesday, a new pullback high for the last month or two, and then we proceeded to settle that very same day below Tuesday's low. That outside day closing below the previous day's low after a pullback high like that is a sign of weakness. And so here we have it. So that's all I'm going to really say about that. I do want to mention, though, in the video, you'll see how following a test of this resistance, the market is susceptible to falling back into the upper 70s, low 80s within several weeks. And that remains true. So I'm going to leave that at that. Let's take a look. I want to just sort of backtrack a bit and mention that a few weeks ago, this was a targeted zone of long-term support in the low 120s. It remains there on the weekly chart and daily chart. And having come off of that, our first target was the 140s. So we've got 141.86 to 147.11 as a zone of resistance that I'd mentioned after testing the low 120 support would be in reach by the end of February or sooner. And it may well be sooner. Holding above, let's take a look. Here we are. Near-term channel support. 132.69 is the extreme channel bottom. It is preceded by 134.19, which I only have as a minor point because it is this former longer-term descending channel bottom that's been holding that I call it 133.66. It really is about a 1-point range today. 132.69 to 133.66 is your pullback support, able to contain selling into later next week, and above which that 141.86 level, which is right about here on the chart, you can see is probably 3 to 5 days away from being tested. So decent support, 132.69, 133.66, able to contain selling into later next week, and above which that targeted long-term resistance at 141.86 likely by the end of next week. Now upside today, I've got 136.76 as an intraday resistance level. And by the way, all of the minor points are carefully chosen. I do want to remind you, especially you aggressive day traders, if you like scalping 1 to 2 point moves on an intraday basis in Apple, here you have decent, well thought out resistance and support levels. 136.76 is, by the way, if you consider Wednesday's high against Thursday's low, that extreme, on the way back up, a 5/8 Fibonacci is 136.76. So it can contain intraday buying. And from 136.76, we could fall back into the 132.69 to 133.66 region on an intraday basis. If we push or open above 136.76, might we test 141.86? I think that's doubtful. 138.61 is the move high from Wednesday. 140.35 is this low area here. So we could stop at any of those points. I will say that if we close today above 136.76, we should within a couple of days reach that 141.86 long-term descending 1/3 speed line, able to contain buying possibly through February. From here, we could fall back into the low 120s again within a matter of a month or two. If we were to close above 141.86, that would signal 147.11, probably within 3 to 5 days. That can also contain buying through February. And not unless we close above 147.11 do I anticipate then this 173.63 in as little as 2 to 3 months. Big picture, low 120s long-term support, holding above it, will keep low 170s long-term resistance in reach, I'm going to say by the middle of the year. We would need, though, a settlement above 147.11 to indicate kind of a protracted and an accelerated rally within 2 to 3 months into the low 170s. So 141.86, able to contain buying through February, once tested low 120s in reach again within a month or two, and closing above 147.11, we're off to the races as we move into Q2, the 173.63 area then likely within 2 or 3 months. Hi, if you enjoy watching our daily Apple report, you'll love our daily Triple Q and SPY reports. They're presented in the same 5 to 10 minute video format. Our daily SPY and Triple Q analysis provides directional market signals that are correlated with highly specific price support and resistance levels. Whether your trading time horizon is short or longer term, we promise you a distinctive edge in your trading of the SPY and Triple Q. We offer a 5-day, no questions asked, money-back guarantee. So go to wickedstocks.com right now and start receiving your daily SPY and daily Triple Q reports today. Let's cover the downside again today. If we happen to break or open below 132.69, I've got 129.69. Now I have 129.86 here as this former channel top. These are the things that keep me up at night that I struggle with. Should it be 129.69 or 129.86? And I believe 129.69, which is what I've opted for, is a downside 50% Fibonacci from the low a few weeks ago against Wednesday's high. So I usually like to go with the lower number just to give the market room to breathe. 130.90 is, of course, the high of the low. I mean, the truth is we could break 132.69 today, and 130.90 may be it to the downside. But in terms of sort of a stick your neck out buy level on an intraday basis, it really is 129.69 that I think you can be aggressive with. We can come off of there actually perhaps through the balance of the day. But just know that if we settle today below 132.69, this thing can unravel all the way back into the low 120s again. And that is not the right chart. And that is not the right chart. Let me find the right chart. Low 120s again. That's part of it. There it is. So if we close below 132.69 today, I give this about 2 weeks. There'll certainly be session containment levels on the way down that we will scout out for you day traders and you 3 to 5 day swing traders. But if you're a swing trader, I guess this is something I can kind of finish up with. You're buying in the 132.69 to 133.66 region, because over the next 3 to 5 days, 2 weeks at the most, that 141.86 level, where you can set a short as a swing trader back into the low 130s again. If you're a position trader, and if we push into the low 140s, you may scout out 122 out of the money puts that don't expire for at least 3 months. And if we fall back into the low 120s again, you might scout out 140 out of the money calls that don't expire for at least several months, because that is the ping pong that may play out here all the way into the second quarter. Buying the low 120s and with an anticipation of, where are you? I should have these better marked. The low 140s then within a month or two of doing so forth and so on. I could talk about the significance of the low 120s and how it can contain selling through the year, and this is all true. And I could also, I suppose, belabor the point that if we were to close below the low 120s, now this is a weekly chart, in the coming weeks, we have a significant long-term sell signal. I've mentioned this before. I will definitely be covering this in detail if we happen to reapproach the low 120s. But for right now, I think I'll just leave you with this chart here. This is the most apropos for the day. Buying 132.69 to 133.66 into later next week, anticipating 141.86 as a completed objective following the test of low 120 support a few weeks ago. And that is really all I've got for Friday's daily Apple report. I'll be back Sunday afternoon with Monday's Apple report. You have a great weekend.